Hey everyone, welcome back to the channel. Today, we're diving into a topic that's been buzzing in the financial world, emerging markets. Are they the golden ticket to high returns or a risky gamble? Let's break it down. First off, what exactly are emerging markets? Think of countries that are transitioning from developing to developed status. We're talking about places with rapidly growing economies, like Brazil, India, China, South Africa, and parts of Southeast Asia. These aren't the slow and steady economies of the West. They are dynamic, fast-paced, and full of potential. So, why should you even consider investing in them? The biggest draw is the potential for high growth. As these economies expand, so do their companies. Imagine getting in on the ground floor of the next global giant. Their middle class is growing, which means more people are spending money on everything from smartphones to cars to better housing. This consumer boom fuels corporate profits and, in turn, can lead to significant returns for investors. Another key advantage is diversification. If you only invest in your home country, you're putting all your eggs in one basket. The US market might be down, but an emerging market in Asia could be soaring. By spreading your investments globally, you can reduce your overall risk and smooth out your portfolio's performance over time. It's about not being tied to the fortunes of a single economy. Now, let's talk about some of the exciting sectors. Technology is a huge one. Many emerging markets are leapfrogging traditional infrastructure. Instead of landlines, they've gone straight to mobile. This creates massive opportunities for tech companies in e-commerce, fintech, and digital services. Think about the sheer number of new internet users coming online every day in countries like India or Indonesia. Infrastructure is another major play. These countries are building roads, bridges, airports, and power plants at an incredible rate to support their growth. This means huge contracts and steady revenue for companies in construction, engineering, and utilities. Investing in this sector is like investing in the very backbone of a nation's future. And of course, we can't forget consumer goods. As incomes rise, people want better products and brand names. Companies that provide everything from food and beverages to clothing and personal care are seeing explosive growth. This is a direct way to tap into the rising purchasing power of hundreds of millions of new consumers. But hold on, it's not all sunshine and rainbows. Investing in emerging markets comes with its own set of risks, and it's crucial to be aware of them. Political instability is a big one. A sudden change in government or policy can send markets tumbling. You need to be prepared for that kind of volatility. Currency fluctuations are another risk. If the local currency of the country you've invested in weakens against your own currency, your returns can shrink, even if the investment itself did well. It's an extra layer of complexity you don't typically face when investing domestically. Then there's the issue of corporate governance and transparency. Regulations in some of these markets might not be as strict as what you're used to. This can make it harder to get reliable information about the companies you're investing in. Doing your homework is absolutely essential. So, how can you get started without getting burned? One of the easiest ways for a regular investor is through exchange-traded funds, or ETFs. An emerging market ETF holds a basket of stocks from many different companies and countries. This instantly gives you diversification and reduces the risk of any single company or country performing poorly. It's a great way to dip your toes in the water. You could also look into mutual funds managed by professionals who specialize in these regions. They have teams on the ground doing the research, which can be a huge advantage. For the more adventurous and experienced investors, you could pick individual stocks. But this requires a deep understanding of the specific company, its industry, and the country it operates in. It's high risk, high reward, so tread carefully. In conclusion, emerging markets offer a compelling story of growth and opportunity that's hard to ignore. The potential for high returns is real, driven by demographics, economic expansion, and technological leaps. However, the risks, political, currency, and regulatory, are just as real. The key is to approach it with a clear strategy. Diversify, start small, and understand what you're investing in. Don't chase quick profits. Instead, think of it as a long-term addition to a well-balanced portfolio. For those willing to do their homework and stomach some volatility, emerging markets could be a very rewarding journey. What are your thoughts on investing in emerging markets? Have you invested in any? Let me know in the comments below. Thanks for watching, and don't forget to like and subscribe for more content like this. See you in the next video.